We are here, we are here, we are here on this amazing day. Okay everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Alright guys, the pair we'll be looking at today is EUR JPY. Okay, back in May of 93, the market has started off into a push down. From there it went to an area of support. And right here we can see the area of the resistance. The market bounced up and down here. Actually created a double bottom, triple bottom, 1, 2, 3. At the triple bottom, we see the retest, the push up, then a retest. From there, the market pushed up again into new areas of resistance. From there, the market pushed right back down, broke previous areas of support to break up further back into that support and resistance range to touch the top of the resistance, came back to the bottom of the support to come back up, break through the support, the resistance, and create new areas of higher highs. And this is the highest the market has ever been back in 98. From there, the market went back into our consolidation area, bounced up and down maybe about twice, came back out of it, pushed all the way back down, created new areas of support. From there, we see about a double bottom and a push up and a retest. So from there, we see a double bottom. This is one leg, this is the second leg, third leg, and that's the fourth leg of the double bottom. From there, the market pushed up at the double bottom. We'll see a retest, and after we see a retest, the market's going to push up, which it did 3 to 4 times. From there, the market put itself into a new area of resistance and a new area of support. There's another area of a double bottom, which is here, 1, 2. The market pushed up, retested previous areas of support here, and it pushed up higher to retest previous area of support in this area. And then we had another push up back into the area of resistance. So we should be looking for a retest to happen, which it happened right here. Once it happened, it pushed up another 1, 2, 3 times. And this is the highest the market has ever been. And this is back in the years of 2008 of August. Also, new areas of resistance has been created. Now we see a double bottom, and here the retest is supposed to try to happen here. It wasn't able to happen, and the market broke down through our support levels, not just 1 but 2, and entered about the third level of support levels. We see another double bottom here, 1, 2, and from there we're going to retest. So once we see a retest, it's going to push up higher, which it did. Created new areas of resistance, wasn't able to break, market pushed right back down, actually broke previous areas of support. And you go another formation of that double bottom, 1, 2, and go to push up. After the push up, we're looking for a retest in the market to push up again. It wasn't able to push up again, so the market broke down, actually broke through our support and created new areas of support. We see it create a double bottom in here. After the double bottom, we got to push up to the top after the retest, and then when the market's going to push up again, which it did for 1, 2, played around in here for another 3 times. New areas of resistance, areas of support. And go double bottom here. 1, 2. Once we see that double bottom, the market pushes up, which it did, looking for that retest to happen. The retest did not happen to push up. Engulfing pattern happened. It became very bearish. Hard push down to the bottom. Broke previous areas of support. Push down further. Now the market trying to lead back to areas of lowest lows. New areas of support has been created. This is the area of resistance. It looked like the market's trying to form a double bottom here, and then a retest probably will happen right here, and then the market will push up, or if not, the market can consolidate back and forth, or it can break down to new levels of support and create new levels or lower lows to try to return back to previous areas of support. Okay guys, that's market structure. We're going to step on over to number 2. We're going to look into overall trends in the market. We're going to erase our screen. We're going to head over to price action. Price action is the last active candle, which is this tiny green candle right here. So we have to identify what we see in the area again. Had go a double bottom, which happened, and once after the double bottom we get a retest and the market to push up, trying to reach new previous areas of high highs. So it shows that our market is in the uptrend. So we're looking for the market to return to previous areas of higher highs currently. Head down to number 3. Let's look for SR lines in the market. So what you want to do is identify what price action currently is, and this is the green candle, which is here. So let's look over to the left, see if what it's trying to do. We can see it's trying to break this area of this peak right here. So we're going to drop a horizontal ray. From there, we are going to look for price action again, and we're going to sit here and say if the market is going to go up, which we think is going to go up, is going to head to the next level, which will be right here. So this area will be the next area of prices trying to reach. And if the market price turn back around, how far would it go down? And it will be with its inverted peak here, with this peak here it's set up, and the market's trying to head down if it reverses and it doesn't break our resistance line where it currently is. We're going to create more SR lines on a lower time frame in between our red SR lines we created on an earlier time frame, on a higher time frame. So what price action is, we are looking for inverted and peaks and inverted peaks inside of our red SR lines. We have an inverted peak here. We have a peak here. We have a peak here. We have something going on here, inverted peak. And we have something probably going on in here, another inverted peak. And we can see how nicely that touches. So from there we created our peaks and inverted peaks. We have our SR line set up. Let's head down to number 4, Forex 101. Let's check out patterns for entry. So how can we identify patterns for entry? Okay, so what we can see is let's work on patterns for entry and shades, because with this market right here we can do this at the same time. So what we're going to do is let's grab our shade, and we can sit here and say, okay, you know what, we knew price action has created lower levels of this W formation. Double bottom was created, pushed up, looking for a single bottom to happen. After that, it'll be another push up all the way to the top of previous areas at higher highs. So we're looking for price to reach here. So if we go down where we identify the market where the beginning of that push happened and beginning of where the market was formed was right here. So where this W was formed of the double bottom, we can color code this as a shading of, I'm going to put this in red. So we basically grab the highest high and lowest low of that double bottom formation. From there, we're going to go to the next level up to identify what we see. And we can, right here, this second level is the highest high, and this area right here will be the lowest low. We're going to color code this. And from there, we're going to go one level up, and this will be the highest high, and we're going to bring it right back down to the top of our previous color coding shade that we created. We're going to change this color over to a purple. So with that process, you want to be able to read the candles also to see what's going on. So we already see a double bottom formation, and we know when we see a double bottom formation, the market will be trying to push up higher, which it did to create that area of that single bottom so it can retest to shoot up higher to the next level. So now we have to identify what's going on in this purple shading. So if we look into the 1, 2, 3, let me zoom in a little closer. So if we zoom into the last 1, 2, 3, 4 candles, we can see here and say, okay, you know what? This fourth to last candle is about 35% of size. The third to last candle is about 75% of size. The second to last candle is about, let's say, 40% of size, and the last candle is about 10% of size. So we can see that the momentum of the candles losing momentum. It went from large to tiny. So something's going on in the market where it could be losing momentum to drop down for a retest to drop up further, or the market may just be trying to do something in here in a lower time frame to shoot up higher. So we don't know to identify what's going on. We just shaded the highest high, created the lowest low, and we'll just wait for the market to form in this purple shading to see what it's going to do. We can go down to the time frame for the daily, and we can take a closer look. And here go a pattern right here. It's about 2 patterns or 3 patterns into one. So what we see is there's just the first leg right here will be, so it's a double bottom, first leg, second leg, third leg, fourth leg. It's created a double bottom, so the market is going to push up, and we should be looking for a retest somewhere in this area here for the push up higher. And also we can see that what pattern shows that it's going to go up is within here. So the green candle engulfed the previous 2 red candles, which identifying the market is about to push up higher. Could be to the red line, could be a little lower, and then for the market something could be retesting and it's going to shoot up higher. But from right now, once the market closes out, that look like a trade that we can take for a move. Engulfed happened over previous 2 red candles. Taking entry to our next SR line will give us an estimate of 74 pips. Pull back for the stop loss. Pull back for a stop loss of 60 pips. So this is amazing trade, everyone. Looking at EJ at 10:24 p.m. 74 pips to the high, 60 pips to the low. That's an amazing move. Okay, so let's go back over to number 6, studying patterns. Study patterns. So studying patterns in the market would just be identifying patterns, identifying forex patterns. So what you're going to do for number 6 is go to Google. You guys are going to type in forex pattern cheat sheets, and you're going to view what videos, I should say pictures, that you're going to see, so it helps you identify how to take the trades in the market when we see the patterns and these symbols. You don't have to learn and know the name of the patterns. Just the main focus is identifying what you see in the forex pattern cheat sheets on Google, so you can take it to the next level and to identify it in your current trades in the market. Number 7, joining. So we are opening up our Telegram and Discord channel. For more information, please email us. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention.